Okay, October, what are we? October 14th, 2025, trade recap. Very good day. Interesting day. Actually, wasn't too interesting. It was really straightforward. But made $466 on the Top Step account and made $958 on the Alpha Futures eval account. So, let's just jump straight into it. I have no yapping to do. Oh, also banged a really nice trade. Yeah, Friday. Oh my god, had to cough. But I was super busy, didn't record it. Might record it later today. I don't know. But let's get into this. Starting on the hourly time frame. I don't really look at the 4 hour time frame as much necessarily. Um, just because it's for my how do I say this? For my style of trading, it doesn't really matter too much necessarily. Um, because for example, you can see we're bearish on the 4 hour, but my bias is bullish. So I don't really look at that too much, too much. I do take a look at it, but it's not my main uh bias time frame where I determine my bias. I determine my bias on the hourly time frame. Coming in, we have London lows right here, along with London low or London high, London high. These London lows were stronger draws on liquidity, or higher resistance draws on liquidity, whereas these highs, they were lower resistance draws on liquidity. And we also had this new week opening gap right here. Okay. So, which I'll get into here in a little bit. So my prediction was that we're going to come down, take out this high resistance draw on liquidity first to get enough orders into the market to move price up and take out these low resistance, potentially even hitting this hourly fair value gap, this bearish hourly fair value gap, which is exactly what happened. Right. Same thing on ES, same exact situation, except the gap was a little bit higher. Now coming down to the 5 minute time frame on both. Price opened right here. Okay. So pre-market, we were just casually cruising around this range right here. And I honestly told myself, I'm like, you know what? If we come out and take out these highs first, I was going to be bearish on the day. And if we took out these lows first, I was going to be bullish. Okay. I predicted originally that we're going to come down and take out these lows and come into this gap first. Okay. Because this was a higher resistance level of liquidity. Now, what makes this new week opening gap is that it's a very, 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 very extremely unbalanced price range. Okay. Price never even came over here. Price just straight up opened here. That's why there's a gap in the chart. What does that mean? It means there's still a lot of orders right here that have not been filled yet. Okay, so what is price going to want to do? It's going to want to come down to this gap to fill all of those orders in. Right? This is like a fair value gap but on steroids. Okay. I knew that at some point today we're gonna want to come down into this gap no matter what. I I just that's what price does. If you're this close to a new week opening gap or any opening gap for that matter, price is going to come and fill it. Okay, unless we are super far extended above it. Okay, then you know what? If it's like 500 points away, probably it's not going to take it. But in this case, we were only 200 points away. Now, again, 200 points is still a lot of points on NQ at least. But today's price action was really volatile. And again, you can see this just by this leg down from here, right here from the market open. Boom, boom. This is like 224 points. As soon as I saw that, because I like to measure all my trades to know what kind of leverage I'd be in, where I could potentially enter and where my stop loss potentially could be. Just so I know what kind of, if I should go in with one contract or if I should go in with two or three or four or five. Okay? That's very important. Because if I was to go in with my regular position sizing, 3 to 4, maybe 5 contracts, and I was to get stopped out, that would be like a few $1,000 loss. Because this is a 52-point stop loss, and it was a little higher before, right? So my initial trade was something closer to this. I'm going to show you right here. It was something a little like this. But as price developed, this was my initial trade. Okay. As price developed, I started to not like it as much, and so I just decided to close at the nearest London high, which was still 112 points. That's still a lot of points. But I did keep it running on this alpha account. Right. If we go over here, over to the 5-minute time frame, and on this alpha account, I made $958. Not only did I risk 2 contracts, but I also had a much larger stop loss, or take profit, sorry. Okay, coming into the trade, or coming into market open, we come down, we shoot straight down to this gap, taking out this low, forming 2 fair value gaps along the way. Okay, now I did enter a little bit early, just a little bit. I didn't wait for a full close on this candle, right? And the reason being is because ES was already really far extended up right here, okay? And I was only entering with 1 contract. My stop initially was pretty low. And again, we bounced off of this gap. We had a lot of bullish confluences. I didn't know how far this candle would have went, so I just decided to enter right here. And honestly, we only had about 30 seconds left of this candle closing, so the odds of it coming completely straight back down were pretty low. From there, again, original TP was at this hourly gap, and the reason why it was so high again was just because of the amount of volatility we had today. Again, this leg down to come take out liquidity was 220 points, right? And most days I wouldn't trade this if we dump this much, but as you can see, price has just been following this trend. Okay, so if price looks relatively normal, if it's not a sudden, complete, huge drop, then it's most likely to take out liquidity and what's the word I'm looking for? Why am I blinking out? And reverse. Okay. As you can see right here, this leg up during Asia session was 160 points, right? So it followed the trend. But if it was just all of a sudden, we had, let's say we took out this range. We only looked at this range right here. Okay. I would have not, and we dumped this much, I would have not have taken a trade. Because in that case, you can't be sure whether we're gonna reverse or not. A lot of times, most of the times we don't reverse. Okay. But since we did have London lows here, we ended up reversing. As price started to develop a little bit, we formed this 5-minute gap. And again, recently, I haven't been really looking for retracements just because the market hasn't really been giving us retracement opportunities. If we did retrace and we did come in and up and out again, I would have honestly added the second contract. No more though, only a second one. And the reason why I just woke up, by the way. I was really tired. I'm about to go out, so I have to make this trade recap right now, or it's not getting done today. The reason why I ended up moving my stop or my take profit lower, we come into the 1 hour time frame. Okay, on both ES and NASDAQ. I don't like to do this a lot, honestly, which I don't know if I should be doing it or if I should not be doing it. But by the time ES took out this high right here, we were chopping around a little bit. And we were going pretty slow on NASDAQ. Okay. Which I was a little iffy, right? If one of them is, of course, one of them usually lags. But for us to be that far from the, oh, sorry. For us to be that far from that high on NQ, have ES already have taken it out, is a red flag, you know. So I was like, I was erring on the side of caution. Honestly, what I probably could have done in reality is I could have extended it at least to take out this uh the second London high, and this would have given me a much better risk to reward and a much better profit for the day. And it was um fairly probable for this high to get hit as well. But again, really volatile day. I did not really want to risk that much. Again, I took a trade off of one MNQ contract and two MES contracts. This trade right here on MES was two contracts, and I made $466. I caught 112 points on NQ off the nearest high and 24 on ES. Right. That's pretty damn good if you ask me. And then I have a free Alpha Futures eval right here where I was just like, whatever. What? Oh, yeah. There you go. Where I was just like, whatever. I'm going to let this ride out. Stops where I break even by the time I hit both TPs. So I was just like, let's let it ride. Let's see what happens. And this is about $550, $520 away from getting past. Just pretty good, pretty good. Not much to talk about today, except use your measuring tool. Use this bad boy right here. It tells you how much price is moving. How much points is your take profit going to be? How many points is your stop loss going to be? Before you even enter the trade, so you know what kind of leverage to enter in with. Okay? Use it. You have a tool, use it. Okay? So, perfect. I don't know what else to say. You guys have a good one. See you guys tomorrow on tomorrow's trade recap.